sold or bought the bracket have to be looking to do business at that location, and therefore it becomes a decision point. When you've got a key level like this bracket here at 71.80 up to a high price of 72.30, you're already looking at that and saying, okay, 50 ticks. 50 ticks on that bracket, and you start saying to yourself, okay, well, where does that 50 tick bracket take me down to potentially? It takes me down into this area here, doesn't it? It takes me into that area. You're already looking for the possibility of profit taking. You're already looking for a short covering rally out of that price area, even without analyzing your value, because a short covering rally is just exactly that. It's shorts covering, which causes the price to rally. Whether the market's bullish or whether the market's bearish, in some respects, makes no difference. You're still looking for that profit taking, and if it's enhanced by, for example, a strong bid on the book, if it's enhanced by a strong market value changing, then you might be able to get yourself a buy trade off of the low price. However, the change of behavior becomes obviously of interest. So this becomes a change of behavior level, and that also becomes something that we would be paying very close attention to. These changes of behavior are pivots in the marketplace. The pivot doesn't take place at the top or the bottom of a market, because there are thousands of tops and bottoms of markets, isn't there? So the change of behavior becomes the pivot. Do you understand? Not the high or low of the day. That's not the pivot, because a high can be created because of longs liquidating. It doesn't mean net selling. So what we've got to try and do is find those pivot prices that we can obviously recognize on the screen. So there was a pivot right there. So when that price pivoted south, we know that there is likely to be selling. Remember, what we do is, when we come up into a pivot like this one here, it's going to be before the pivot and into the balance area, usually about 50% of the space. Why? Because that's the price that they will try and defend at that stage is there. That's where you'd imagine the sellers would re-emerge. Now that leaves you with a large area to work into. It leaves you with a, that's not a bad thing, that's a good thing. It means you're not linking yourself to a single price line. You're simply looking for an area in here to get that short sell into place. When the market breaks again and you're looking at these and you're saying, okay, how did we come up with these three measures? Well, we did the last three price brackets. That's how we came up with them, right? So we've got the big price bracket, which obviously is now from here to here. So that gives us this measured move from there, yeah? So that's obviously straightforward. Now you might be saying, where do I draw it in that bottom box? Well, the best thing to do is draw the whole box, because that gives you the area that you're going to be operating in. I like to draw half the box, because I don't like big, massive gray areas. I like to really start zooming in on that exit price area. And that's why I draw in about half the box at times. And if I see there's a confluence in an area, I'll make the box just that little bit bigger to include the confluence. So where else would we look for a measure? Well, of course, we already had this bracket here. High bracket, low bracket. So one would imagine most of you will start working out what that bracket would give you in terms of a measure. It is a bracket after all, and it's a good looking bracket there. And you're going to start working your way into that bracket there. Well, you can see that that's the measure against that bracket. Again, it's a great bracket with a brilliant short covering rally coming off that price. And again, what is this? It's another change of behavior. It's another pivot. Well, it's not really a change of behavior, and as much as the buyers were never in charge. The big change of behavior is this one at the top edge, because that's when the buyers turned to sellers, right? The buyers never took structure here. So to say that that's a change of behavior would actually be slightly misleading. Would you agree with that? Yeah? So this is the one we're talking about here. It's not a change of behavior, because the buyers were never in charge. So how can you change a behavior that didn't exist? The buyers did not dictate structure here. The sellers were dictating structure. So that's not necessarily a change of behavior at that point. So the change of behavior is still there, and that's always going to be the only real change of behavior that we've seen until we see a buyer structure break. And obviously when we started to come down into that measure, we got another buy side bounce. So we've now got this measure, we've now got this measure. So how did we get this small measure? Well, that should be relatively straightforward as well. we get this small measure here because obviously after the last measure bounced, we now have a low price, we now have a high price, and we now have this next measure which sits perfectly, perfectly inside the previous measure. And we're looking at that area now for a perfect double measure into that. So in other words, there's going to be the more measures we get in one area, the more shorts that are going to be covering their positions, correct? So we know that this is getting more exciting for a possible buy trade. Now, in addition to that, and does there need to be much more? In addition to that, we also have the prior day swing low. In addition to that, we also have an enormous wholesale price level of $70 a barrel sitting and resting down into those price areas. So we can already recognize that these measures have been proven to be almost unbelievable. Almost unbelievable. And as we come into these areas, we also get something else happening, don't we? We also get a technical slowdown, don't we? We had a fast money break to this measure, and we still got a short covering rally. But this time we're getting a very slow grinding move to the bottom edge, and then a very fast candle reversal into the first bracket structure, which allowed you a very easy read on that bracket structure forming. I'm not asking you to buy the bottom edge, I'm asking you to recognize the bottom edge. Now, for some people, they could have calculated that this was the change of behavior here, and that would be absolutely fine, but it's definitely a questionable change of behavior to use. And whilst it would have given you this idea that this all becomes buys, realistically, the change of structure didn't actually really take place to probably realistic one of these two. Now, you might be saying, well, which one was it? Was it this one or was it this one? Well, technically, it was actually this one, because this is the highest high of the market that broke structure. So this was the technical change of behavior here. That's when sellers got taken off the numbers. Sellers that were successful, because that's what you're asking. The last time sellers that were successful get taken off the numbers is where the change of behavior comes in. It doesn't mean that these levels are insignificant. It just means that they don't have as much structural significance as you would have expected. So obviously, based on that change of behavior, you're starting to work your way back out of that narrative. So there's the change of behavior, there's your price lows in there, and you're obviously coming up into this measure here, which is obviously tying in quite nicely with that change of behavior in the background in here, where we have this big commercial sell zone from that prior change of behavior. Now, if we look at this change of behavior, obviously the idea is that that's a relatively meaty buy zone in there, and the gap between them is only about $1,000. So, but it's still good, isn't it? It's still good areas to recognize where possible trades may start taking place. And you can see that this measure at the change of behavior at that big commercial sell zone has resulted in a sell response. No shit, Sherlock. Perfect response and a perfect outcome. And it's likewise, you're going to be doing the same against this buy box in here. If the price were to trade down to this buy box, you'd be looking at that $71 area for a break, and then trying to get a good read on this as it breaks down into that zone and trying to find a buy reversal out of this area here. So structure, perfection. I'm sure if you're an oil trader, you've got all of those. If you haven't, why haven't you? It should be relatively straightforward to have seen these narratives and take account of them. We'll take a screenshot, we'll shove it in Smart Alpha if you want to just check to see that your structures are the same on a 5-minute chart. If they're not, let us know why not. If oil's not your market, of course, make sure your structures are up to date on whatever market is your market.